This is the highest opening price gold's ever been at. The highest closing price would have occurred on Tuesday, May the 6th, and that occurred at about 34.72. So 34.72, right in that area is where we would look at for the first real level. Now, gold breaks above there and challenges these all-time record highs that we saw on an intraday basis. Well, now we're looking at what our long-term target was. I have been on record at least for a year looking for gold to challenge 3,600 this year, the first quarter of next year. And so I still believe that is a realistic target. It might be optimistic when we're looking at gold well under that, but I think that that is achievable.
Gold's highest closing price to date was around $3,472 on May 6th. If gold breaks and holds above that level, it would confirm a significant breakout and set the stage to challenge previous intraday highs. UBS has set ambitious targets for gold prices, projecting the metal to reach $3,500 per ounce by the end of 2025 and further climb to $3,600 by mid-2026. This forecast represents a potential upside of approximately 14% from current price levels. Despite current prices being below that range, Wagner also maintains his long-standing target of $3,600. The speaker, Gary Wagner, a veteran technical analyst and respected voice in the precious metals space, particularly gold and silver, explains that gold has been forming a compression triangle pattern, with a likely breakout coming soon. If this technical setup holds, he expects gold to rise to around $3,430 in the near term, possibly followed by a brief dip and then a strong upward thrust. Gold's recent consolidation between $3,100 and $3,150 marks a key technical support zone during the current pullback. Traders are monitoring momentum indicators, such as the RSI and MACD, to gauge the short-term direction of the market. Volume analysis is critical. Strong moves on high volume suggest trend strength, while weak volume may signal fading momentum. These tools help traders navigate gold's current phase with more precision. Moreover, geopolitical instability continues to push investors toward gold as a safe haven asset. Ongoing U.S.-China tariff tensions have heightened market uncertainty, with any breakdown in talks likely to boost gold prices. Analysts highlight gold's historical strength during political turmoil. Recent military conflicts, election risks, and global trade concerns have reinforced demand for physical gold and gold-backed securities. Even temporary agreements, such as the recent U.S.-China truce, demonstrate the sensitivity of gold to global events. Remember to hit the bell symbol and subscribe at the beginning of the video so you don't miss any updates. If you like this video, please leave a comment below and give us a thumbs up.
Looking at above 3,500, the highest historical price gold's ever been. And by the way, this chart is the futures contract, continuous now representing August gold. But we had our first wave down. We're labeling that our A, our B, our C, and I believe we are currently in our D wave, which means that I would expect gold to rise here up to maybe $3,430. Gold unfolds in the parameters of this pattern, and you don't cut a picture to fit a frame. So we'll see what gold does. I believe that we could get one spike up, one final very small correction, and then what we call a thrust. A thrust in a compression triangle is when prices break above this upper level resistance line, which is obviously been superlative resistance, and that will then act as a level of support. And I believe that support will begin at 3,400. Right now, we have support at about 3,320 down to about 3,290. Not really. I mean, we had the one correction that actually took gold under pressure. You can see the real bodies, meaning on a candlestick that's red, it opens here and then closes lower. So at the closing price on Wednesday, the 14th day of May, and the opening price of Thursday, the 15th day of May, that remains within this triangle. Of course, we're fixing the triangle to this, but that particular two candles and these two lows here really are what we based this lower level support line on. And so far, it has been range bound. The range has been narrowing. And I would expect if gold trades within this pattern, in other words, if gold prices unfold the way this pattern predicts that it might, we should see a range that continues to compress with a high at around 34.30, one more move down, and then you get gold moving in the prevalent trend direction. So I've basically compressed the chart so that we can, as we obviously know, the prevalent trend direction in gold up to this point in which it really narrowed and we got this compression triangle was solidly higher. Gold's been on an absolute tear, considering that it was at about $2,600 at the beginning of this year. And now we're talking about levels that are 33, 34, 32. Even though we might be disappointed in what we're seeing in terms of gold being able to continue this, the fact that it has so eloquently run up and so substantially gained value, my sense is that this is to be expected. And if this is truly a correction after hitting an all-time historical record high, I mean, if we would have talked about gold at $3,500 a couple of years ago, people would ask what we were drinking. I mean, are we drinking from the poison pill here? But now that is a realistic target because we saw gold challenge that price point. In terms of market sentiment, the bullish market sentiment in gold is telling us everything is not great. It's telling us that there are concerns about inflation, primarily due to the tariffs. And that's an ongoing challenge because we don't know where that's going to land, what the level of tariffs will be with what countries. Trump has now put another line in the sand. This one is August 1st. So we'll have to see how that plays out. We did get, as I said, a most recent CPI. We did get an inflation report that didn't show inflation really spiraling. And so if anything, I still see bullish momentum, even though we've seen a compressing range. And the key is right now, the volume is okay. It's not super hot, but at the same time, we're looking at gold at a level no one's ever seen. And so I believe the performance has been good. And anytime you have a market overheat, and I will certainly say that gold from February of 2024, from $2,600 up to just over $3,500, you watched it move between $800 and $900. If you take away what we call the wicks, the intraday highs, the intraday lows, how many years can we go back when we saw gold gain, $800, $900? There is no other time in history when gold has done that. And I think that with that kind of performance, many traders are cautious about betting that it will continue to rise. And the fact that the range is compressing, I believe, is really summer trading. Even though the volume is still okay, you don't have the large institutional traders. They're all off in beautiful lands like Australia, taking in the sun and taking it easy with their family. So for the most part, you have, I believe, the speculative trader is there, but the large institutional trader is absent right now.
Gary Wagner explains that the United States dollar has experienced its worst first 6 months of the year since 1973, as President Donald Trump's economic policies have prompted global investors to sell their holdings of the greenback, threatening the currency's safe haven status. The dollar index, which measures the currency's strength against a basket of 6 others, including the pound, euro, and yen, fell 10.8% in the first half of 2025. On April 2, the Trump administration unveiled tariffs on imports from most countries worldwide, denting confidence in the world's largest economy and triggering a sell-off in U.S. financial assets. More than $5 trillion was erased from the value of the benchmark S&P 500 index of shares in the 3 days after Liberation Day, as Trump described the day of his tariffs announcement. U.S. Treasuries also saw clearouts, which lowered their prices and sent debt costs for the U.S. government sharply higher. Now, the U.S. dollar has dropped sharply, about 12 and 13%, from highs near 110 to recent lows around 96 on the dollar index. This decline is mainly due to the growing U.S. budget deficit and fundamental economic weaknesses. While there's been a short-term bounce in the dollar, around a 2% gain recently, it remains below its 50-day moving average, which has acted as strong resistance. Technically, the dollar continues forming lower highs and lower lows. Moreover, silver's recent spike above $39 was significant, as it marked the highest level since 2013. For over a decade, silver struggled to break above $30 to $33. Gary admits he doesn't track silver as closely as gold and avoids speculating too much, but suggests silver's rise may be linked to gold's massive rally. While gold is a recognized haven, silver is more tied to industrial demand and GDP growth, making its rally more complex and more challenging to predict. Now let's recall the interview.
Well, look, we did get a fall from really not record levels. We've seen the dollar above 109, 110, but you have to go back a decade to see that. Gold has fallen, and it's fallen hard from 110 down to this recent low at 96. That is what, a 12, 13% devaluation against the basket of currencies it trades against. Of course, the weights are uneven. On the dollar index, the euro is the heaviest weight. There are, I believe, 7 other currencies or 6 other that compose the index, but we've seen the dollar fall under pressure. And the one thing that we've seen really since February of this year, this green line represents the simple 50-day moving average. And that is acted as resistance. Every time the dollar would pop up, the dollar back off. Now, I don't believe it's trying to fit this frame. In other words, I don't believe that the dollar is weak because it approached the 50-day moving average. I believe that the market psychology behind traders fuel it so that when it gets to these levels, they believe at least short term it's overbought and they bid it lower. We do have a tentative bottom, but what I would like to see is the dollar break above the simple 50-day moving average, because that's what we saw back in September 2024 up to January of 2025. And the dollar has been in a spiral ever since that. I mean, it's gone down or devalued by over 10%. That's a huge move in a short period of time, relatively speaking. I would agree with that to some degree, but to me, this is a large fiscal deficit, budget deficit that continues to grow, and that's what's devalued the dollar. I mean, fundamentally speaking, this recent move up that began at the beginning of the month, and we're only halfway through the month, has taken it from 96.50 to 98.50, let's say. So it's moved it up about 2%. That's a large move. The question is, will we see it break above this? And we can't, with any stretch of the imagination, if we put a trend line from these series of highs here, we do need to see the dollar break above that. So the market technicians, and they are predominantly the traders' mentality, are looking at these technicals, although we know that fundamental events are what move markets. We know that traders tend to, I believe, have that self-fulfilling prophecy, whereas when we look at a stochastic oscillator, if we buy it every time it goes under 20 and then crosses, as it did here, is that a self-fulfilling prophecy? But the key is this. We've seen, if we look at these different areas, so middle of May, first bit of April, well, that's kind of a top. But really, you're getting a series of tops, and these bottoms are all a series of lower lows, and you're getting lower highs. And that is the definition of a market under pressure. And we haven't had a major breakout. We've had the dollar go to a point where it became extremely oversold, devalued, and then we would see it move up. But the moves up were limited. And the underlying factor we focus on is that when it returned to a point in time in which the dollar was devaluing, it traded to yet a lower low or a lower close. And that's the key. If you keep making lower closes and lower lows, and you're making lower highs, you've got a market that's moving lower. Is it around 34.70 to these lows at 32? You just got to take that range and go right in the middle, which is really 33.35 roughly would be the middle point, which is we're just above that right now. You know, to really see silver with any kind of context, I almost got to put it, monthly. Let me move it to the high that we hit when silver broke above 39. Of course, that was briefly. Now, this is on a monthly basis. The last time silver was at these price points was 2013. So we're looking at history in terms of the fact that silver has really never even challenged much above $33 per ounce for the last decade plus. And so this is something to get excited about. Silver is not something that I follow very, very closely because it was so pressured to find these tops just above $30 an ounce to come down. There was some excitement back in 2020 when we saw it actually really peak from about $20 up to $33. It came back down to 21, and then we solidly broke above these tops from 2020. And historically speaking, look where we've got to go to see the last time that silver was priced anywhere above 32, 38 or challenge $39. Honestly, the only answer I can give you is above my pay grade. I mean, one of the theories are that gold forward that I'm comfortable with, honestly, because as I said, the best way I can define my sentiment, it's above my pay grade. I just think that those that witness gold break above 26, 27, 28 to 3,000, 32, and silver was rather tame. Attention with traders would move from gold into silver. Gold is still the ultimate safe haven asset, along with the dollar. And silver's never really been in that wheelhouse. And it's the high level of industry. And of course, that would be tied into GDP. But I would think that would be more in your wheelhouse than mine.
Despite historical price fluctuations, geopolitical unpredictability, and declining trust in the U.S. dollar, gold remains the focus of international financial attention. Gold remains a haven and a wise investment, with technical indicators suggesting a possible breakout and analysts such as Gary Wagner and UBS predicting further upside. Silver's sharp rise above significant resistance levels may signal a more substantial shift in the precious metals market, one that both industrial and monetary factors could influence. Do you think gold will soon surpass $3,500? Is this only another brief bounce, or is silver ultimately poised to outperform gold? Please feel free to share your thoughts by leaving a comment below. If this video is helpful to you, please subscribe for more content and give it a thumbs up.